First of all, thank you all for coming here. This is a great event, so thank you for organizing this as well. Before we begin, I would like to ask all the panel members to introduce yourself, who you are, what you do, and how you discovered Bitcoin. So Conza?
Conza co-founded the Australian Mises Seminar. So for those that don't know, Ludwig von Mises, the greatest economist of the 20th century. I passionate about liberty, understanding reality, and I suppose I first heard of Bitcoin, the old Mises community forums, mid-2010, but initially very skeptical, and then it was several years later that a mentor of sorts, Conrad Graf, kind of highlighted or made clear why I was wrong. And from there, we kind of helped bring out the Mises Seminar events. So we had him speak in 2013 about Bitcoin, not too far away from here. But yeah, that's discovered it then.
Thank you. James?
Yep, so my name's James Chick. I'm the lead analyst at Glassnode. So we're the leading on-chain analytics platform. I discovered shitcoins in 2018, and after losing many sums of money and paying your tuition, I lost another 90%, and then finally read the white paper. But through 2018, I learned a lot about markets, and my background is civil engineering. In fact, I studied here, so it's kind of ironic that I'm back here as a Bitcoiner. Essentially, the movement of markets and the fear and the greed plotted against time was kind of, on-chain analysis was kind of growing up, and it kind of combined that engineering view of what markets are doing and the market structure. And on-chain analysis, you could start to actually see these patterns playing out, human behavior in charts. So kind of that combination of learning about markets, learning about the macro environment, and then finally the penny dropping on why Bitcoin is different and why it makes a lot of sense in this world. And then the tools to be able to visualize this thing, it just kind of clicked all at once, and it's been a fun ride ever since.
Thank you. Jeff?
So I'm Jeff Yu, so I run an asset management firm that specializes in regulated Bitcoin products. My history is that I learned about Bitcoin in 2013 during the severe financial crisis. Someone say something about Bitcoin, I was like, what the hell is this? Sort of fast forward later, most people would know me that I run Australia's largest shitcoin casino. Before I started venturing to asset management, so these days we run, went from an unregulated space and regulated industry into running the country's first and only fully regulated and ASIC authorized Bitcoin products that is under this new license that it created about 2 years ago called Crypto Assets. We'll go into deeper later on. But that's me. Happy to see all of you guys here today.
Thank you. Now, a very difficult question when you ask a Bitcoiner, what is Bitcoin? And we will attempt to answer this question. But before we can, we have to dive into the fundamentals, which is money. So, Conza, instead of asking you what is Bitcoin, what is money?
What is money? So money is the most saleable good in society. And what the essence of that is if you want to take it back to a very historical story, you've got the starting out at a kind of level of barter, and you have a variety of different goods or commodities essentially on the market, different things that have become over time the most saleable good. And they compete, and historically over millennia that was gold won out. Now understanding the fundamentals of money, as you suggest, is very vital to answering the question or helping people understand why Bitcoin eventually. One kind of key example why the Bitcoin standard's been so successful is that before someone can accept a solution of understanding what Bitcoin is and what that problem it solves, you first need to understand the problem. And just asking that question again, what is money, really helps narrow that down. And so the Bitcoin standard essentially covers off 8 or 9 first chapters that are all about the problem. And so I'm sure many of you today kind of already understand the problem. It's the why you're here. You've accept you're looking for a solution. but money, ultimately, it's the most saleable good in society. Historically, that's been gold. But the easiest key takeaway is to understand that what all those previous different monies that evolved, the most common medium of exchange in society, is they've all had the similar element to that is it's a commodity, so like shells, whatever they've been. But there's particular properties that make a good money. Divisibility, portability, whether it's fungible or not. There's a litany of those, and then competing on the market, on the free market, one in particular arises because if you've got just barter, where I've got chickens and then I've got eggs and you've got beef, and we need to then find someone who has the double coincidence of wants, essentially, is the problem that money solves. And over time you realize that, it's a lot hard to find someone who has the exact same opposite want. So if I trade for something that is more saleable or more marketable, then I have a better chance in the future of getting what I want via indirect exchange or medium of exchange. And so that's where Bitcoin comes to the fore, where to jump to the end of answering what is Bitcoin from my perspective, from Austrian school perspective, which has a 151-year history of answering the question of what's the origin of money, and really as a helpful tool for Bitcoiners, I think to answer the question of what Bitcoin is, it's a rivalrous digital commodity on an open source monetary network. And so it slots in. Satoshi himself, 2010, kind of indicated, it's like a collectible or a commodity, and he was right. And so there's this rich history that it fits very nicely in, where you understand it coming from the perspective of it's a rivalrous digital commodity on an open monetary source network. So that's, I suppose, a bit of it in a condensed format.
Thank you. James, so when we are talking about money or commodities or assets, do you think it limits Bitcoin to just these terms, or do you think it gives other opportunities, such as to different ideas, or even in the line of work that you do? Is there any insights that you can share?
Yeah, for sure. I mean, just to kind of bounce off what Conza said, I actually view Bitcoin as a form of time, because essentially when you are spending your scarcest resource, which is the time you have on this earth, and you work for money, right? You earn some kind of asset that you can defer that payment for later on. Now, if that particular asset is being inflated at 2, 5, 20, 50% a year, someone's taking away time that you spent. So to me, that is the scarcest resource we all have, and putting that into 21 million coins rather than an infinitely debasable fiat, it's a representation of your spent time. Now, it doesn't just stop there, because we're all doing this, right? Every person who touches the Bitcoin ledger, to make an imprint on it, whether it's a transaction, whether it's an address, whether it's a hash, you must spend the transaction fee. You must burn the energy. There is no way to impact Bitcoin ledger without imparting some kind of scarce resource onto it. So as a result, every single thing that happens on Bitcoin is essentially a human decision. And if we now play this book for 14 years or 140 years, there's going to be 140 years of human decisions baked into the money. So in many ways, the UTXO set captures, it's almost like a time capsule of what was going on in society. It could have been rate rises, it could have been a war start, it could have been all these things, but human beings reacted by responding. I mean, for me, I look back at my 2019 self, I'm looking at this debt situation the world's in, and I was expressing my view on the world by buying Bitcoin and moving it to my wallet. So in many ways, it's, what is Bitcoin? It's a bit of a time capsule, and bringing it across into a bit more of a financial sense. In that way, it's a bit of an index, right? We talk about indexes, there's a stock index and there's the VIX. Bitcoin is almost like an index for, some people say it's an index for liquidity, some people say it's for, a macro flow of funds. But in many ways, it's almost an index for humanity. And the more people who start to adopt this thing, and as this starts to grow, it is going to kind of represent that collective decision-making that we all make, which I think is a pretty fascinating concept. But it's really what fascinated me about on-chain analytics, and something why I keep studying to this day.
Thank you. Jeff, so we discussed about money. Our money that we have, the fiat money, is regulated. Now, there's a lot of calls for Bitcoin to be regulated. Do you agree? So let me ask this. First of all, can you share your insight into, let's say, the regulation aspect of how maybe Bitcoin is categorized as an asset? And do you believe it can be categorized or regulated from a corporate governance perspective?
Yeah, I think first to understand what the Bitcoin, regulation and things like that is that Bitcoin itself is not really just an asset, it's an innovation of governance structures, right? So a lot of asset ownership that we own, like our houses, our businesses, they're all underwritten by a human code of law. So you need regulation come in place to protect you or sort of protect your interests against bad actors, right? People sue you, they can go to the Supreme Court to fight out things like that. With Bitcoin, the asset is your ownership of the private key, right? It's free from human control, hence why it's completely irrelevant when it comes to human governance on the asset or protocol level. But on the on-ramps to Bitcoin, you can regulate, obviously, good example is that an unregulated on-ramp like FTX can cause a lot of harm, a lot of problems, but it's not the fault of Bitcoin, the protocol itself. Bitcoin just keeps ticking along. So in Australia, our top financial regulator, ASIC, introduced a new asset category in a Australian financial license category called crypto assets in October 2021. Most people do not know this. I think it's really relevant to us, whether you are a holder, you are a business that deals with Bitcoin. I think these are things that you got to watch very closely because how it affects you with regulation, prevention is always better than reactive. If something bad happens, a bad regulation is introduced, it's so much harder to undo it. But I think in Australia, ASIC has actually done a really good job with creating, instead of saying Bitcoin only and become a very easily attacked from a sort of political and philosophical standpoint from the rest of the world, or create a crypto general thing that you can squeeze in a bunch of shitcoins. They created a new asset category called crypto assets, and within that category, you have to go asset by asset to go through a suitability criteria, whether you got institutional support, institutional benchmarking, clearing houses, custody, yada yada, to be able to classify and authorize to as a licensee to be able to offer a product. So at Monochrome, the Bitcoin product we offer is the first of its kind in Australia where it's offered under this new category. To show how hard it is, the license was introduced in 2021. Till today, we're still the only one that is a market with that product because it takes a lot of expertise, a lot of time, a lot of money to get to a regulated position, which arguably is a form of proof of work, right? It's like if the regulator makes it easy for Bitcoin regulation to introduce, it can be easily to be manipulated or misinterpreted. And I think so far, we've seen a really good progression of where that is. Where it goes to next, and where I'm most interested to see is that where there's a lot of other unregulated service providers, crypto exchanges, brokerages, these are completely outside of the regulatory purview in Australia, and how that would evolve in Australia is still yet to be seen. But we can see that from the financial sector side, the financial licensee side, that's really took off 2 years ago. And I think that's not going to slow down.
And just to follow up, when we're dealing directly with the Bitcoin network, do you believe it's self-regulating or does it need to be regulated?
So with the protocol itself, it's a moot point. Like you can try to regulate Bitcoin, but it's like try to control gravity, right? You probably spend a lot of money and actually realizing you're pointless to do that. But the on-ramps are important to regulate because they are the ones that people has a higher chance of getting screwed, right? If for example, in the crypto exchange of FTX, they told people that there is this amount of Bitcoin in there, but turns out there's not. Like these are not the problems of Bitcoin itself, but these are problems with the operators that offers in and outs to the asset class, which are equally as important before a hyper-Bitcoinized world, right? Most of the assets are still in fiat. They need to move their assets in and out sometimes, and that is where the regulators are looking at. In fact, it's one interesting thing that most people in this room would be surprised to hear is that ASIC, our top financial regulator, actually runs a podcast. It's funny because it's all very scripted. They go by, very carefully speaking. So there was one podcast they did about crypto and Bitcoin. And interestingly, the podcast, you can actually look at the transcript if you're not, you don't have time to listen, is that ASIC say that it's a mistake for people to confuse Bitcoin with other crypto, and then some part else to say something like not all crypto will perform like Bitcoin, and things like that. So our regulator is actually smarter about this asset class than what most people think, because a lot of people that are giving them shit are shitcoin casinos, right? It's like because they're not getting the kind of regulation that they hope for, which is a looser version of it. ASIC basically just went full on Bitcoin is Bitcoin, other assets are individually sort of categorized and approved. I think that's a good thing. Like we could end up much worse than what it is today. But that, in fact, Australia has one of the most comprehensive and robust, and I think it's very sensible as well, regulation when it comes to crypto on-ramps.
Thank you. And Conza, like when we are looking at the future, what sort of actionable advice would you offer when it comes to whether it's understanding money or understanding Bitcoin or both?
Yeah, I'd be suggesting understanding there's a whole world of a rabbit hole to go down in terms of the Austrian School of Economics. Again, 151 years of answering these questions. It helps you inoculate yourself against economic fallacies. Again, when you're trying to say orange pill someone or bring them on this journey, why don't they see it like I see it? Often you've done the work to understand the problem where they haven't, and so I'd suggest as an actionable piece, it's read Mises, understand that, and then on top of that, in terms of Bitcoin, really it helps provide the foundations, but then Conrad Graf, I suggest, is in terms of accuracy. I think I'm a big fan of accuracy. The worst thing, Frederick Bastiat has a quote where the worst thing that can happen to a movement is not to be skillfully attacked, it's ineptly defended. And there's certain actors out there within the community that, pushing narratives that are not necessarily ideal. So I think he can help you, inoculate you against that, understand a bit of strategy. But in terms of practical things, I guess come listen to my talk on BISC, peer-to-peer Bitcoin, where just on the topic of regulations and stuff, yeah, centralized exchanges have to essentially deal with that. Decentralized exchanges, not so much. The decentralized exchanges, such as BISC, kind of provide a competition to the centralized exchanges. And so in terms of being pro-regulation, essentially you're picking winners and losers. There's a certain self-interest involved for those to then, be in favor of certain regulations otherwise. BISC is really the decentralized approach, like what I think the exchange that Satoshi would have endorsed or been proud to use. And so, they can try and do what they want, but similar to Bitcoin, it's, permissionless and, good luck to them.
Thank you. And it's an interesting point when we're discussing about regulation, both from a centralized and decentralized, but from an individual perspective. James, what would you recommend for an individual to do and why?
It's a good question. Certainly, for me, is to kind of observe how your behaviors change. Because, many Bitcoiners I've spoken to have a very similar journey where it changes the way you look at things and how you interact with the world, how you think about wealth preservation, how you think about, even kind of a refocus on the things that really matter in life. It kind of restructures the way that you think about the world. And, certainly when you go down the Bitcoin rabbit hole, you observe more of the gears, how they actually turn. And sadly, a lot of the gears that turn are not overly great, right? There's a lot of stuff in this world that's not overly fair, and it's not, the fiat money system really isn't designed for the majority. But as you kind of enter, I'm sure gold bugs have gone through this as well, right? You start to understand that soundness of money. Because you understand what you own and why, you start to focus on other things, right? I don't spend as much time thinking about, preserving wealth and, which pair of shoes to buy. You start to focus back towards what really matters, which is, family. It's making sure they're actually spending time in productive and useful mechanisms. Now, when you read the Bitcoin Standard, for example, there's a lot of stuff in there that makes a whole lot of sense. I'm not entirely sure I'm there with, changes art and all the rest of it, but the concept of sound money giving people the ability to think long-term and lowering time preference, I've literally experienced it myself. So that's certainly been a lesson for me, is just kind of observing how my mental model of the world has changed And it sure didn't change before I found Bitcoin, right? There was kind of a trajectory I was on. As I started to discover it and learn more about it, it just consumed 5, 10, 15, 20, 100% of what I was kind of thinking about. And now I'm kind of getting to the point, I've been in the industry, since 2018, but really doing it professionally for 3 years. And you kind of hit that point where, I was talking about this earlier, an event like FTX happens, and rather than what I would have been in 2018, which is shit, I need to sell everything, it was, well, that's a bit of a pain in the ass. But my coins are in cold storage, this thing will come back, and there's that level of calm that, it's more of a nuisance than a real problem. So at an individual level, just observe your own kind of mental journey. Certainly talking to other Bitcoiners, it's a very, very consistent theme that it changes the way people look at the world, and it does reflect a lot of those sound money principles, looking further into the future. And I'll tell you what, I can't wait for our politicians to own some Bitcoin, because we might just start getting some long-term decisions.
Just a follow-up question. So we've mentioned FTX, or a centralized exchange. What would you recommend for, so you said cold storage. What does cold storage mean? And for example, do I, as a Bitcoin user, do I need to ask somebody's permission, or can my Bitcoin be confiscated?
Yeah, I mean, no one has to ask permission for anything, right? That's the beauty of Bitcoin. Now, when it comes to the question of kind of cold storage and the like, I've heard lots of critics say that, Bitcoin's too hard to use and people lose their keys. And yeah, people do lose their keys, it happens. But at the same time, you can start with a downloadable mobile wallet and not even write down the seed if you've got $100, right? If you're willing to lose it, then that's fine. But as you learn about it, your appreciation for why it's important grows. So over time, your security setup builds up, right? And eventually you do finally understand that cold storage is a different element to keeping it on a centralized exchange. And you come to appreciate counterparty risk, right? And strangely enough, what we've seen in 2022 in the crypto industry, we're watching it play out at a much, much larger scale in the traditional finance world right now. We're seeing the same bank runs that we saw in 2022. We're seeing the lack of collateral. We're seeing all the Ponzi games. I mean, that's essentially what the traditional finance system is built upon. So when you understand that counterparty risk, which the world is about to go through a process of finding out, no, you don't have to ask permission to do it. It's a process of building up your knowledge base, your technical skills of how you actually store the Bitcoin. And in many ways, in fact, we see this in on-chain analytics. Stacks of coins were lost in dumpsters, and people threw out their hard drive and mined and forgot about it. There's all these stories of people losing it back in the day. And cool, the headline is it's worth 300 million today. It was worth 12 cents when you got it. So you lost 12 cents, right? You could have had 300 million, but you lost 12 cents. But now people lose coins much, much less because there's an appreciation for it. The infrastructure is better. So that's kind of a process that both the individual but also the kind of whole network goes through at a time.
And just very briefly, for beginners out here that would like to experiment with some of the mobile wallets, is there any mobile wallets that you would recommend for them to try out?
For me personally, I've recently been looking at Nunchuck. I think they've done a fantastic job on the UX and integration with hardware. And pretty much the only place that manages to extract sats from my wallet is CoinKite. So a shameless shill for NVK and the team. They're doing a good job.
There you go. And Jeff, can you offer any actionable advice for our audience today regarding Bitcoin, or what to do or what not to do in the future?
I think sort of instead of just more audiences, just generally for people that are running businesses and considerations of around how do you offer the best experience and the safest experience of people, is that I preach cold storage, but I also know that cold storage may not be day one options for a lot of people. Might just be the circumstances of the person at the moment, because people that have billions of dollars, they don't want to spend 80% of the time digging and worry about keys for a 0.5% of the allocation at this point of time, right? But also, when fiduciaries access the asset class, you cannot have them doing cold storage. It's basically just bad governance. People can go to jail for that, and they're not going to be able to adopt it. So it's very important to give people the option, right? So like the thing about we do at Monochrome, it's like a really geeky thing that we put in the product is that for most Monochrome fund or Bitcoin fund like stuff in the world, you can only take money out in cash, right? But we spend like another year and a lot of money in there and basically put in a way for people that can take our Bitcoin, physical Bitcoin, out of the fund. And then when they're ready to cold storage, you can do it on their own time. So these are things that I don't think anywhere else in the world you would have that. But from a product development and product operator point of view, like it's not good to either force someone to do something they're not ready in the first place, or lock in someone into something you know that eventually they're going to run out of options, right? So it's all about just keeping that channels and that access as fluid as possible. It might be harder to build products and run products like that, but I think for the space, because for a lot of people that run businesses on Bitcoin, like it's not about just the money for us at the stage. It's all about getting Bitcoin mature to the next stage and how we can get more people to access it safely, prevent heartbreaks, like people losing keys or people lose money on FTX or FTX 2.0 or whatever maybe they're coming back looks like. And all this stuff needs to stop at a certain stage. And you need certain regulation in place to control the on-ramps with all these people offering it. But the beauty of Bitcoin, unlike a lot of shitcoins, is that you can try to attack it on a protocol level, but you just cannot control and regulate it. And that's the beauty of the decentralization of Bitcoin versus the other assets.
Would you like to comment, Conza?
Yeah, I'd say that a key takeaway for myself is like the risk associated when we talk about FTX and a few other things. If you've got Bitcoin on an exchange, you don't have the keys, you don't have Bitcoin. It's an IOU, fiduciary media in terms of like a monetary term. At best, you have a money certificate. So like, okay, you withdraw it, they actually have it. And this is what you see with like bank runs in the traditional sense. Kind of the tide goes out and they were fractionally reserving that, so they don't actually have the Bitcoin. So withdraw your funds, don't keep anything on centralized exchanges. And BIS or decentralized exchange, you control the keys, so you don't need to, it's not this question of, you're not reintroducing trust. Like the whole point of Bitcoin, peer-to-peer, electronic cash system, peer-to-peer being there's no third party that's involved. You don't reintroduce trust. And so, yeah, that's kind of, I guess, the decentralized approach is the best way to go.
All right, thank you. And thank you everyone on this panel. And hopefully everyone has enjoyed this talk. Thank you.